Greetings all. Why is my name down there? We gotta get that off there. How's everybody doing, man? Doing a quick impromptu stream. I'm going to be out the rest of the day. We had some inflation data come in today, guys. And let me share this real quick on my X because from StreamYard now, it doesn't broadcast it unless you share it. For whatever reason, they're having some issues. Let me do that real quick. Boom. All right, cool. Let me get my name off of here. I don't know why I was doing that. There you go. All right. So, okay, this is going to be a quick stream, guys. We had inflation data come in today. It came in super hot, okay, much higher than what was expected. You see here, really across the board. Expected 0.3%, 0.5%, so it came in hot there. Core PPI came in very hot. Core PPI year over year came in very hot. Everything came in very hot on the inflation numbers, which you think about the impact of this, right? Inflation up, less chances of rate cuts, risk off. Okay, you know, risk assets, we want more rate cuts. So this is bad for crypto in particular. The other thing is inflation up, that means debasement trade. Okay, if people are concerned about the value of the dollar, it's very bullish for gold and silver. In fact, going to the rate cut situation, if you look here, you can see it in real time in the prediction markets. Though it's interesting, Brian Armstrong posted about this. He's like, the prediction markets are information markets. And you guys know, if you watch me, I cover prediction markets in my investment strategy all the time. It's very, very important. Now, I pulled this up. I already knew that obviously inflation numbers would trigger this. So I was able to act on my trades pretty quickly. But here you'll notice, like, this is the likelihood of how many rate cuts we have this year down across the board based on these inflation numbers. In particular, the chances of 4 or 3 cuts happening this year down drastically. Okay, so again, inflation hot, good for gold and silver, bad for risk on assets like crypto. Silver in particular opened up a long. I said this, and if you look here on my post, I said super hot inflation data, long in gold and silver here. I did have another post where I talked about opening up a Bitcoin short. Silver, man, the $92 level was very critical. We broke above that, and we have been off to the races. My trade right now is up 60% so far this morning on silver. So freaking printing there. On the gold side of things, once we broke around above 5,100 rather, I've talked about this quite a bit. That was a critical level. We've been showing a lot of strength above. Open up a new long on gold, up 20% there. Bitcoin, I did open a short, small position, because the critical levels, and this is what I've been looking for, in anything in this region, we're just kind of chopping. My whole thesis, of course, was inflation numbers up, rate cuts down, risk off, right? And I know we want Bitcoin to be a debasement, a hedge against inflation. The markets aren't looking at it that way. It's trading like a risk on asset. Okay. And until that changes, it doesn't matter what the hell we think or what we want Bitcoin to be. We need to pay attention to what the markets care about and what the markets think. And bottom line, it has traded like a risk on asset. I did open a short just below 66,000. Not a high conviction play. For me, before I have any conviction, any big plays on Bitcoin, we break above 72K, I'll look at opening longs, especially 74K. I'll get more aggressive on that. Shorts, to enter any like meaningful trade here, I would be looking at us breaking below 60 again. Anything in between, I'm looking for like maybe some scalps. I closed this already at like a 10% gain because, again, I didn't have high conviction on it. I didn't see a major move taking place. So it did break below, closed it. Not to say we can't go lower. I think we absolutely could, but just not a high conviction play for me. So gold and silver, longs still open. Bitcoin, I closed on that. Other plays that I looked at this morning, I added to my OSO bags. There's a big pullback, over 35%. I covered these AI agents in the stream yesterday. If you didn't watch, highly recommend you go back and watch those because this is where the alpha is at the moment. Added to this around 800, just over 800,000. Market cap, this is already up on the day. If it drops more, I'll continue adding. Same with Atlas Forge. Added this one earlier this morning, so still hasn't really moved much, but looking for pullbacks and these opportunities. Felix is my biggest position right now, has been pretty unbothered by market conditions right now. I might look to add to Kelly Claude just because I think the total addressable market's huge there. And I covered this yesterday on the stream, but they just got their first app launched in the App Store. It's starting to generate revenue. There's a ton that are coming. I think, whereas Felix has seen the revenue already, and we've seen price action follow that, Kelly Claude's been pretty stagnant. And I think that's because the revenue is about to start hitting in a big way, and the market hasn't figured that out yet. So that's one I'm looking potentially. Let me pull that up for you guys real quick. That I would potentially look at adding to before they start shipping a bunch of apps, sitting just under 8 million market cap. This thing's gotten up to 16 already. A bunch of apps in the hopper, ready to launch, all revenue coming from those apps. And the best part about it is that revenue is coming from people that don't have to know anything about crypto, don't have to know that it's coming from an AI agent or anything, right? This is just revenue coming from normal everyday people. So I think this is one that could have a lot of potential upside coming. I want to talk about 375 AI. I was on my morning run and I was listening to video from one of my favorite YouTube channels, but I get this question a lot about 375 AI, about the billboard cameras in particular. Everyone's like, well, who's going to buy the data? They're like, I don't get it. So we scroll down here, you'll see there's several categories: public safety, autonomous vehicles, freight and logistics. They've been next to ports, quant traders, those what I would focus on, and advertising agencies and media companies. So quant traders is, I think, going to be a key place for them. And I want to play this clip from Hearsay Financial. If you don't follow this guy, you should. He's got almost 400,000 subscribers. If you're a macro nerd like I am, you'll love his channel. Maybe you already follow him. But his newest video I was listening to on my run this morning, and I want to play this part in particular. Let me reshare this because I lost my audio. Freaking StreamYard. I'm about to start using another new streaming service. Because I want to start streaming to other platforms like TikTok. One of the community members, she's like, I think you do really well on TikTok. And I'm like, I haven't really touched it. I'm like, and when it comes to TikTok age, like I'm a boomer, man. But we're going to give it a try. And StreamYard's been giving me trouble anyway. All right, so audio should be there. I want to play this clip, and I think this should resonate with you on 375 AI.
Out of the random noise that happens in the market, and there's no...
And a little background here, by the way. He's talking about how AI is going to change the trading game for quant traders, for some of these hedge funds that are trying to bring in data using AI models to trade for their algorithms.
Real reason why it would continue working. Now, it's true that the way AI models learn how to invest is not specifically just by going back, looking at past historical performance, and then coming up with strategies to try and trade that same strategy into the future. The people who are deploying this technology are smarter than falling for that trick. But it's also true that they are gathering other data in order to try and find an edge, whether that's satellite data, traffic data, ad spend data, consumer habits, prices, any data that is happening out in the real world in the economy that could potentially give you some sort of an indication of future outperformance or underperformance. That data is being compiled, analyzed, and acted on, which also means...
Okay, so this is something that Harry Dewhurst, the CEO of 375 AI, talks about a lot. Filling in the gap. We have the digital data out there, but filling in the gap on that physical data, as he mentions, traffic patterns. But understanding like what 375 AI is doing, they have these cameras on all these billboards. They are able to identify a specific vehicle and basically see where that vehicle is going. Harry was telling me in our interview, these quant traders in these hedge funds will pay crazy amounts of money for satellite imagery of parking lots of retail locations. So they're going to be able to fill in a lot of these gaps, a lot of this data. Joe goes on to talk about in this video how there's going to be synthetic data, and getting real data is going to be really, really important for these AI algorithms and training these models. So I think that as we start to see more of these traders using AI models, how are you going to get an edge? Well, it's going to be getting unique data sets, real data sets that aren't synthetic, that aren't created by AI, and that's what's going to give you an edge versus other traders out there. And data is going to be so valuable, in particular, the type of data that 375 AI is collecting. I think we have to really take that into consideration. For me, I was like, man, I knew this, but hearing it from someone like Joe, this guy is freaking smart, man. Really just gave me more conviction. And I know that's a question a lot of people are asking me, like, I don't get it. Who's going to buy this data? It's like, guys, a lot of the data has already been scraped for these AI models. They're talking about creating synthetic data. If you can collect a new data set that doesn't exist anywhere else, there is a lot of value in that, man. And I think it's only going to become more valuable, especially as they have historical data sets for some of these locations. The price, 1.564. I added more to my bag this morning. So continuing to add on these dips and get my DCA price down, man. Loving it. Loving the accumulation of 375 AI EAT right now. One last thing before I leave you guys, something to keep your eyes on. The chances of a strike on Iran are going up significantly. If you look at March 15th, March 31st, this is when we would strike by, up 23% on March 15th, 48% March 31st. I mean, it seems like a foregone conclusion this is going to happen. So starting to think about how we can play this, right? For me, obvious short. Okay, so unrest in the Middle East, anytime you have that happen, you see sell-offs in markets. Oil prices go up, okay? That is tied to inflation. So kind of the same thing we were talking about, the inflation numbers coming in hot today, same type of chain reaction, okay? Oil prices up, inflation expectations up, less rate cuts, uncertainty, bad for risk on assets, okay? So looking at potentially shorting crypto, I think that would actually be a long opportunity for gold and silver. At least that's what conventional wisdom would suggest. I need to go back and look at the last time we attacked Iran, how gold and silver reacted, but I would think they would be up. The other thing I'd be looking at is, some of these AI agents I've been talking about, generally when we see a pullback in markets, they get hit particularly hard. And that's where you can really pounce on those opportunities. So keeping some stables in some of those wallets that I'm using to accumulate these AI agents and waiting. If we do see some sort of attack on Iran, I think that would be a great opportunity to pounce on those pullbacks. So looking at events ahead that maybe could come, but then also, keeping your head on a swivel, keeping your pulse on the market, what news is coming out, being able to act quickly. Like this CPI data that came in a lot hotter than people expected, was able to really capitalize on that this morning and up pretty big, man. So we continue to win, up 64% now on the silver long position. I actually also entered a 2x silver position in one of my retirement accounts. I was sitting on quite a bit of cash in there. And that's printing as well. So very exciting stuff, guys. With that said, I'm going to be out the rest of the day touching some grass. Hopefully not too many bunkers. I'm going to be out on the golf course. It is our first nice day in Chicago in forever. And then it gets cold again tomorrow. So I want to capitalize on that. With that said, guys, have a fantastic Friday. Take care.